Hello, my name is Troy White. I'm with Hoodoo Financial, portfolio manager and financial educator. What I'm here to talk to you about today is wealth building as it pertains to legacy finance, legacy investing, and financial planning related to legacy investing. So, wealth building methodologies utilized by the high net worth are remarkably simple but consistent. And obviously, there's variation as you will see as we go. But these methods, what I'm going to talk about today, allows for that flexibility, that variability, that adjustment. And that first step begins with financial literacy. The high net worth are financially literate. And financial literacy, yes, it means understanding the terminology, the tools and things like that. But it's way more than just knowing the vocabulary words related to finance and investing. It's about understanding the strategies and the methodologies that you're going to utilize. So you have to understand, what are these investments? How does this make money? How does this work? It's not good enough to just know the catchword. You need to know what this means. So not the in depth, but you need to have just a basic understanding of what the investments are. And so in doing that, that's going to affect the key component of financial literacy, and that is investor behavior and financial psychology. And I'm telling you that the number one determinant of your success is your investor behavior. And that is influenced entirely by your financial psychology. So that's built from the ground up. So that was built when you was a little kid. So your financial psychology has been shaped since then, up to then, and currently right now. So the only way to change it, if it's negative, if there's some negative components to your financial psychology, the way that you grew up knowing about investments and wealth building and money, uh, the only way to make changes is to improve your financial literacy. And so that's what you're doing now. You're listening right now. So because we want to make sure we change your behavior as it relates to investing. So that's to understand when not to bail out and run with the crowd, when to be greedy. Be Warren Buffett says, be greedy when others are fearful, and be fearful when others are greedy. And that is such a true statement as related to stock market investing, because and we'll go deeper into that as well on other videos or other lessons. But it fundamentally is understanding that the investing is about the information that's available in the market, and reacting to and acting upon the information that's available in the market. So we're still on financial literacy. All right, moving on. Financial planning process is the next thing. High net worth plan out their finances. They plan out their financial future. They plan out their family financial wealth building strategy. Their family financial wealth building in general is planned. It was planned for them in many cases, but someone has to create that plan, start that plan in motion. And that plan is a goals-based plan. And that plan is going to consist of you investing and consistently monitoring and adjusting. So obviously you're working with professionals. So you have created a plan that allows for the flexibility that will occur in the market, the investment environment, the government, your family environment, your family circumstances. So all of these are factors that are moving. So we must react to them. So we plan for them and plan around them at all times. And so this includes knowing the cycle of our assets. We are planning to utilize your assets in a cycle so that they will continuously grow and build. That cycle starts with stock market assets. So you invest what you can in the stock market. And from there, you consistently dollar cost average into your stock market portfolio, be that from your job or wherever. And that regular $25, $2,500, 25,000, 100,000, whatever per month that you can invest is the amount that you invest into your stock market portfolio. We then reposition some of those resources, meaning we utilize some of those as down payment into real estate. We utilize real estate for the appreciation, but even more so for the income producing aspect. So we want income to be generated into our portfolio. That income we're going to put back into the stock market. As those stock market assets continue to grow, again, we reposition some of those resources into businesses. As those businesses kick off income, we reposition that income. We put that income into our stock market portfolio and continue that cycle. As all of these generate income, we reposition that income at all times back into the stock market. Our stock market will have fundamental portfolio strategy inside there in itself. Our real estate investment strategy will have fundamental strategies inside that portfolio to build that portfolio itself. Fundamental design that we're looking for based on your financial plan that you want your portfolio to look like because of the way that you want to take care of your portfolio, the way you want to pass down your portfolio, the way you want to utilize your portfolio. Maybe you want them all Airbnbs because you want places across America to go stay at sometime. Stay in your own Airbnb. This is just one of 1,000 potential strategies that just come to mind. And so this is part of the cycle of assets. We're going to continuously utilize this to reposition them. And this is how we're going to build portfolios as part of our wealth management. We need wealth management. And so when you are portfolio investing, this is more than just stock picking. So you have to invest in such a way that you are portfolio investing. So you're not taking on commissions in a certain way and fee per trades, you know. So you have to have the right accounts and have the right firms and so on. But but it is available to you now at our firm. We offer these services to you at just take a look at our website. And basically, this wealth management is based on your risk portfolio, your risk profile, excuse me. And so these are risk-based portfolios that will be built to accomplish your financial planning goals. And so these portfolios are built not because you are wealthy and you have money to invest, but because we are able to invest with at our firm with no investment minimums. But other firms have, even though they have high investment minimums, they're not as high as was previously required. And most wealth management firms require you to have 500,000 in investable assets for you to access this type of investing. But there are some firms that are offering some type of combination of these services, but we provide the full management, wealth management services at rates that you wouldn't even be able to access them with $500,000 in investable assets. But we have no investment minimums. That's the point of me saying all that. And so which allows you to dollar cost average the whatever amount it is you have available to invest on a consistent, regular monthly basis, whether it's $25, $2,500, $25,000, $250,000 on a monthly basis. This is the amount you're going to invest, and we're going to devise a portfolio that is suitable based on your risk tolerance, your risk profile, and that whatever the amount that you are dollar cost averaging into your portfolio, we're going to be investing into your portfolio in that manner. And this is going to be a diversified portfolio. So, whether it's 30 stocks or 100 stocks, I have some favorite models that I like to build upon, starting from my Internet 5, my favorite Internet 5, but I'll discuss that with you if you became a client. So anyway, so this leads me right back in the circular manner, back to asset allocation. We have to have our funds, your portfolio assets allocated into the right sectors, meaning right sectors to accomplish your goals according to your risk tolerance. So I shouldn't even use the word right, the best. And remember back to what financial planning is all about, is consistent monitoring and revising and adjusting of your plans. So that includes the monitoring, revising, and adjusting of your portfolio to make sure that we are balanced in the proper manner according to your risk tolerance, and invested in the best stocks within your portfolio. And outside of your portfolio, making sure that your assets are allocated to maybe that portion of alternative assets and or real estate that you have deemed is suitable for your portfolio and to meet your goals. And so the reason we do this is to build a foundation, build a platform, build a place that is welcoming to wealth, because money goes where it's invited and money stays where it's welcome. And money, we can replace the word money and wealth. We're trying to build your assets in your portfolio into one that is inviting wealth, inviting growth, and one that wealth will remain and stay and is able to pass on and grow in exponential manner, and to be passed on to your heirs. And that's what it's all about. So we have to plan to do this. This won't happen on accident. And so he who fails to plan plans to fail. You will not build this legacy investing portfolio, this machine of finance and investing and entrepreneurship and business that can be passed. That it consists of financial planning. It was part of financial planning is estate planning, and part of estate planning is building a will. And so it's not just the here and now, it's how does now relate to your future and your family's future, so that they'll have the big painting of you and your wife above the mantle in the family manner, you know what I'm saying, in the future. This is a truism, we try to make it so, you know what I'm saying? So that's all about being prepared for opportunity. We have to be on the lookout for opportunity. And part of what we teach at Hoodoo Financial is learn, plan, invest. That's financial literacy, financial planning, and portfolio investing. And that means we're always on the lookout for opportunity and being prepared for opportunity so that our opportunity doesn't arise and you're not prepared. to act upon it. And so I'll leave it at that, and I look forward to seeing you in the next lesson. We'll be talking about more in depth about real estate and how real estate is such a vital component of your legacy investing strategy. And we'll talk more about that then. I'll see you in the next lesson. Thanks for listening. Holla back.